Hello, good afternoon. My name is Andrew. I am the Communications Director here at the New Hampshire Insurance Department. I'd like to welcome you to our webinar this afternoon, where we'll be discussing various abuses, financial abuses in the insurance markets. I'm very happy to introduce our commissioner, but before I do that, one housekeeping item. We are happy to entertain questions. We invite you to type those into the chat, and our subject matter experts will address those at the end of the presentation. Without further ado, I'm happy to introduce our Commissioner, DJ Betancourt.
Well, thank you, Andrew, and good afternoon, everybody. Happy early Thanksgiving. As you can see here, I'm wearing my ugly Thanksgiving sweater, hoping to make that a thing. But more seriously, again, I want to thank everybody for joining us today for this month's webinar as we explore a really important topic, which is financial abuse in insurance. How it surfaces, how we respond as a department, and what both consumers and professionals need to know. You know, for us here at the department, this is not just a theoretical risk. Our department data makes it clear. So in fiscal year 2023, the Consumer Services Unit handled approximately 1,200 formal consumer complaints involving the types of activity that we're going to talk about today. On the fraud side, we are seeing several hundred fraud referrals each year, again, focusing in on the type of conduct that we're going to talk about today. And what these figures show us is two simple truths and important truths. One is that consumers in this state are actively reaching out when they feel like they've been wrong or they feel that there's they feel confused. But two, the potential for abuse and misleading in our insurance marketplace is real and not hypothetical. So Josh Hilliard, our enforcement counsel today, is going to cover some of the key practices that jeopardize consumer protections and help to identify those areas that consumers should be aware of and that professionals within the industry should be aware of. And let me stress too, the vast majority of agents and brokers and carriers in New Hampshire, they're very good people. They're doing the right things. But it takes only a handful of bad actors to erode market trust, especially for more vulnerable populations, more vulnerable consumers. And our job here at the department is to keep the market both fair and functional and making sure that we are doing what we can to guard against those bad actors. So again, I want to thank you for devoting your time today. I'm confident that by the end of today's webinar, you'll have clearer eyes for the risk areas and a better sense as to how to ensure the Granite Staters get the transparency and protection that they're looking for. So with that said, I want to hand things over to Josh.
Great. Thank you, Commissioner. For those that don't know me, and that may be a good thing given the audience, because those that can interact with me, it's usually because there's a concern about a violation of New Hampshire insurance law. My name's Josh Hilliard. I'm the Compliance and Enforcement Counsel here at the Insurance Department. So I've got an agenda I'd like to run through with you today to give you an idea of what we'd like to cover. So I want to tell you all about the difference between enforcement versus our market conduct divisions versus our fraud division here. Since I work in enforcement, I'm going to focus on that and give you all a rundown on what the enforcement procedures here are at the New Hampshire Insurance Department. And then what I think might be most interesting to most of you is focusing on some real cases that we've worked on here at the department involving concerning products and sales practices, including things like Frankenstein plans, other non-ACA healthcare plans, annuity sales, consumer guarantee contracts, and Medicare Advantage and Medicare supplement sales. I presume some of you may know, of course, what some of these are. Some of you may not know what some of these are, but I'll run through them all and happy to take questions at the end of the presentation. And then perhaps most importantly, both how the New Hampshire Insurance Department can help both consumers or those in industry here on the line about concerns that affect both the marketplace as well as negatively affect consumers, as well as how you can help us here. So enforcement versus market conduct versus fraud. There is some overlap between the three divisions, though they each have specific areas in which they focus. So enforcement, the unit I work in, we usually focus on investigations into singular instances of civil violations of New Hampshire insurance law. On the other hand, market conduct usually focuses with examinations to uncover and address systemic violations of New Hampshire law. Lastly, fraud is focusing on criminal violations of New Hampshire law. So these are all different. In enforcement, we're oftentimes looking at our regulated entities, whether they be an insurance carrier or a consumer guarantee contract provider, or perhaps an insurance producer. While market conduct is usually focusing on the larger entities, the insurance carriers, when they're conducting their examinations, while fraud is focusing on those criminal violations that are most frequently occurring because you have either a healthcare provider who may be fraudulently submitting claims for services they haven't provided to their patient, or you have individuals who are engaged in insurance fraud. For instance, they don't have car insurance, they get in an accident, and then after that accident, they're getting insurance and then trying to claim that, of course, the accident occurred after their purchase of insurance. However, the three divisions do regularly assist one another with our investigations and examinations. About every week, I'm speaking either to fraud or one of the market conduct divisions, given that we have one that focuses on life and health and the other on property and casualty, and working with them to either assist or provide some, just a sounding board for ideas as we work through the different challenges we face. So enforcement, I'm going to focus on that, like I said, because that's the division I work in. We receive referrals both from inside and outside sources, and we investigate those referrals through New Hampshire RSA 400A16. That is our investigation statute. We request documents or other information from witnesses or the subject of the investigation. We do a lot of online research. We use some of the NAIC reporting tools. They're tools available through the National Association of Insurance Commissioners. We use some of the reporting tools that we're able to join with some of our federal agents, our federal agency partnerships, things like the FTC or FCC, work with CMS. We, of course, do all sorts of online searches through Secretary of State's office or social media to find additional information related to either the subject of investigation or to track down witnesses. And, of course, we speak to other regulators, including our sister states through the NEIC, through CMS, when we have issues, of course, with some of the products, excuse me, either through the ACA or through Medicare, Medicare Advantage, as well as the Secretary of State's office here in New Hampshire, the Securities Division, as well as in other states, given that many of the producers who sell life insurance also provide financial services. They're registered investment advisors, so there can be quite a bit of overlap when there's concerns about individual entities in that space. We, of course, interview witnesses and or subjects of the investigation to really try to get a holistic picture of what occurred and if the concerns that were brought to us, either through, again, a referral from within, maybe a referral from our consumer division or from market conduct or fraud, or a complaint that we received directly from outside, there is sufficient legal evidence to continue with the investigation and take potential administrative action. Cases are really resolved in one of three ways once we begin an investigation. There's, of course, many times that we close them without further administrative action. So you can imagine with all of the different referrals we get, both from inside and outside sources, the different complaints we receive, more than 50% of the investigations that enforcement begins to investigate, we don't actually take administrative action. And that can be for a host of reasons. It can be because, for instance, the individual that we're investigating lives out of state and may be engaged, let's say, in some unlawful conduct in Texas where they're domiciled. But they made no sales in New Hampshire. They may be licensed here, but they've made no sales in New Hampshire. In that instance, we may not actually take the time to take action against them and instead just put a block on their license. So when they reapply for licensure, we can be alerted and ask questions at that time should they continue to seek licensure here in the state. Otherwise, we may just not find sufficient evidence to support any action whatsoever, and if appropriate, we'll provide notice to the complainant and or the subject of the investigation. There are many times then that we do resolve cases where we find sufficient evidence for a violation of law through a settlement agreement or a consent order, and these are oftentimes a great way to resolve a case because they can include novel terms for resolution. Given that many of our statutes do not permit direct restitution to complainants or consumers that have been harmed in some way by the actions of a producer or an adjuster or another regulated entity, through a consent order, oftentimes we can obtain that sort of recovery for a consumer that's been harmed. And lastly, of course, through an administrative hearing. It is a quasi-judicial proceeding. The rules of evidence do not apply. We oftentimes call it sort of like a mini trial. They thankfully occur much more quickly than an ordinary trial would in civil court. If you think, on average, it's probably about 3 years from filing a complaint, maybe more like 2, but 2 to 3 years from the time one files a complaint till you would really see your day in court. Well, with an administrative process here at the department, that usually takes, I would say on average, about 6 months from the time we start an investigation to the time we get to a hearing. So it's much more quick than a civil trial would take. There are appellate opportunities as well with that process, so it's not resolved in 6 months, but at least that first administrative hearing usually takes place in 6 months since the genesis of that investigation. So here's where I think you guys might all like this the most in terms of some of the real case examples I have, the things that concern us here at the department, and where we see different individuals and entities taking advantage of really New Hampshire consumers in the New Hampshire marketplace. And to echo some of what the commissioner said before, honestly, a lot of the domiciled entities and producers here in the state really do a great job. Where we see a lot of these come from are from entities outside the state, individuals or entities outside the state who are doing business here, who bring some of these different sorts of products to the state, which cause a lot of problems. And the first one I want to talk to you about is what we call Frankenstein plans here, and they're called this at a number of the other departments of insurance across the country. So it's what you see when you have an entity or an agency bundle together a lot of insurance or insurance adjacent products to, in essence, mimic major medical plans. So it will include things like a hospital confinement plan to pay you $100 a day should you be hospitalized. It'll include a critical illness benefit that should you be diagnosed with cancer, you get $10,000 or $20,000. It may include a discount prescription benefit plan. And it sounds like a joke, but I swear it seems every one of these also includes things like discount flowers that you can order and discount car rentals. They just seem to package a bunch of these things together and meld it all together. And when a consumer reaches out looking for a healthcare plan, we have some less than reputable agencies or producers then misrepresent really what these plans are to the consumer and say, oh yeah, this is a great plan. It's going to really compete with some of your bigger players like an Aetna or an Anthem or a UHC plan. And they really don't. They don't come close to really having that same amount of coverage. And so what we see is both misrepresentations with the bundled product, but then consumers that are really harmed by this because they believe that they've purchased a product that's going to provide them that protection should they have some significant medical event. Maybe some of them even have ongoing chronic issues that they know they need care for, but then they receive this sort of plan thinking that it's going to provide the protections they need, and it really doesn't. So what follows here may be a little difficult to see, but this is a snippet from a real exhibit from a case we had a number of years back where we had an agency here in the state that was pushing these plans. And I should say the agency wasn't here in the state. It was out of state, but it was selling these plans to New Hampshire consumers. And what I'd like to draw your attention to is you look over, a little bit more than halfway over to the right, you'll see a column that says agent commissions. And it's a little tiny for me to read on the screen, but I know we have numbers in the 30s, the 50s, the 70s. So these are the commissions paid on some of these Frankenstein plans, which of course are much more significant than you would see on like an ACA compliant plan, which may be $20 or $30 per member per month. So you can imagine if you're an unscrupulous producer who has a consumer reach out to you and you're out of state, you have no connection to this person, you have no real reason to point them, I'd say, in the right direction towards potentially an ACA plan that would provide them with the protections they need. You sell them one of these plans, and in a single month, you could reach or exceed a commission that you're going to get in a whole year with an ACA plan. So unfortunately, there's a strong incentive for producers who are not looking out for the consumers they're serving to sell plans like this when they're structured in a way to pay such high commissions. We did have a case a number of years ago where we fined an agency $250,000 for the sale of such products here in the state, and as we were able to resolve it through a consent order, we were able to get $82,000 in direct restitution to consumers here in the state who had purchased these plans. We were pretty happy with that resolution. A few years back, we did fine 2 agents for misrepresentations relating to the sale of these sorts of products. And we currently, of course, have ongoing investigations against a number of entities offering these types of plans here in the state. I'll echo what I said earlier. We don't see it so much, at least thankfully, I haven't seen it with producers or agencies here in the state. It's an issue with out-of-state entities and producers who are licensed here properly in the state than pushing these plans rather than plans that would be more appropriate to the consumers they're serving. At the end of the day, what we say all the time is, if it's too good to be true, it probably is. When a producer is speaking to a consumer and saying, I can get you in this great plan, it's going to be just like one of those ACA or they might say Obamacare plans, but it's going to be so much cheaper. I'm sure most of the people on this call realize, as innovative as you might want to be, it's difficult to provide a better product in this space and provide it at, a drastically decreased cost. So if it sounds too good to be true, it probably is. Consumers need to be wary. Another one I'd like to talk about are other non-ACA healthcare plans. So this is, again, a snippet of a real exhibit from a case we had here at the department that enforcement investigated and took action against. And I highlighted a portion there of a partnership agreement. And you'll see in that section, it talks about how one of the purposes of this partnership was to provide employer-sponsored health care for the partners of this plan. So the surprising thing is, of course, we have a number of entities, again, out of state, selling here in the state, that claim that they are ERISA plans, that they're exempt from state regulation because they're an employer-sponsored plan, and that these individuals who have purchased this are in fact limited partners. They're working owners, a part of this partnership in which they are doing some work and then purchasing this health insurance. However, all of the individuals we've talked to in New Hampshire that have purchased these sorts of plans, none of them did any sorts of work, none of them received any sort of pay, none of them even realized that they were employees or working owners or had any stake in a partnership. Now there's a sense where, of course, many of these people signed documents that said they were going to be part of a partnership, and there's a bit of buyer beware, and they should recognize what they're purchasing. But what we find, just like the misrepresentations with the Frankenstein plans, is that we have individuals, consumers looking for health care, reaching a producer out of state who unfortunately does not appear has their best interest in mind, and sells them one of these plans, but says to them, oh no, this is great, it's a great plan, it's got great coverage. They might even throw around some names of reputable companies to, again, make it sound as if this is going to be a great plan, but there's very, very thin coverage. And so what we see is consumers purchase these plans, and the Frankenstein plans do the same thing. They may cover, your PCP visit. They may cover some cheap prescriptions that you got to fill at the pharmacy. But the minute you have a more significant claim, they deny. And then we get those complaints in here at the department because someone believes this whole time they've had a plan that is ACA compliant that provides them with that fuller coverage when they really don't. We have a number of open investigations against some of these fake, I use scare quotes with my hands, fake or alleged ERISA plans. And right this year, actually, we ordered one of these companies to cease all sales here in New Hampshire. And as part of that resolution, we were also able to get them to provide to all the consumers here in New Hampshire who had purchased them notification that the department found them in violation of New Hampshire law, that they needed to cease providing this product here in the state, and then direct all the consumers to the ACA as a marketplace to find that full medical coverage that they were looking for. Another one, very similar sort of vein, are healthcare sharing ministries. These do have a safe harbor under New Hampshire law, RSA 126V. There are some pretty strict requirements. There are a number that do operate lawfully here in the state, but a number that don't. And the same concerns we have with both sort of these Frankenstein plans that are just a amalgamation of really minor medical plans, or this fake ERISA plan, is very little is contractually covered. And consumers don't realize that when you have a producer or someone else who's sort of in this healthcare space and is selling them this product and is just really misrepresenting what the product is. We've taken administrative action against 3 of these sorts of entities which had been operating unlawfully in the state. We levied fines against them, got them to leave the state, and in many instances send communications to the consumers that they had enrolled in their plans to, again, direct them towards the ACA for open enrollment. Others are operating lawfully here in the state. Really, if you think, the idea behind these sorts of plans came from religious insular communities, things like the Mennonites or the Amish, who were caring for one another, and it became part of the law, both here in New Hampshire and federally, with the passage of the ACA to provide a safe harbor for these types of entities. So there's certainly some that are operating lawfully. The concern is those that do not comply with the law and those that are, aggressively expand, looking to get on as many members as possible. And just like the alleged ERISA plans or those Frankenstein plans, they may pay your PCP visit, some other small visits, but the minute you have a more significant healthcare claim, they're going to deny. We've seen ones here at the department where we had an individual who, she just fell and broke her arm. I mean, it wasn't as if she was doing anything that might not abide by the contract she provided, because particularly with the healthcare sharing ministries, they'll carve out things like addiction treatment. They say straight out, we don't cover that because, addiction is usage of those substances is against, our creed or beliefs. But this woman was just outside on her deck, fell, broke her arm, it was a bad break, and she needed surgery. And they denied it. Really no good grounds to, other than the fact that it was a big bill and they didn't want to pay. Just like these other sorts of plans that are adjacent to a major medical plan, consumers need to be very aware of what is and what is not covered. They need to look closely, and if it seems too good to be true, it oftentimes is. One thing we get a lot of complaints about are annuity sales. For those that don't operate in this space, annuity, right, is a contract with the company to provide a guaranteed income at a future date. Honestly, annuities should be called life insurance, and life insurance should be called death insurance because, right, life insurance is betting that you die too early and you can provide for, your dependents or family, while annuities hedge against outliving your savings or retirement. What we oftentimes see here at the department is twofold. We see sales that are not suitable for the consumer, either because the consumer is very elderly and it's unlikely they'll outlive their savings at that age, or they simply don't have the kinds of assets to purchase this kind of product in a way that, sets them up successfully for retirement or their later years. The other thing we see with some frequency is churning, of course, when a producer will replace an existing annuity with a customer with a new one, really just for the benefit of getting that commission. There are times when that occurs and the consumer actually may be in the same or even a better position with the new product because there might be a sign-on bonus with the new annuity. So they get some sort of bonus with the premium they're putting down. However, this is almost always against, of course, the policies and procedures of the different companies that are offering annuities here in the state, and it's contrary to New Hampshire law. So there becomes a part here where I often like to educate those who wonder, well, what's your goal there at the department in enforcement? It's just to protect consumers, right? I say no. Our goal here at enforcement and at the department as a whole is not just to protect consumers, but to protect the marketplace, to make sure it's a fair and competitive marketplace for all of the entities operating here. And churning is contrary to that. Here is again a snippet or a real exhibit from a case we had, I think this was just last year, 24. You'll see I redacted some portions of it, but what I'd like in particular to show you is that second section, financial information. You'll see there's different brackets in terms of financial figures and then different amounts in terms of total net worth or liquid net worth, things like that. And this was actually part of an application that an elderly couple came here to the department and complained about. And in particular, they came and they said, we purchased this product through a producer we knew, and we almost have no money left. I mean, they still had some, of course, Social Security, and I believe they had a pension as well, but all of their saved up cash, they own their house, but all their saved up cash, their liquid assets, were now tied up in the sale of this product. And that didn't make sense because the application said they had quite a bit of liquid assets. Turns out the producer had not accurately identified their net worth and their income when he had submitted that application to the company. We have big concerns and red flags going off here because it appears that at that point the producer has done this just really for the benefit of that commission, which can be significant on an annuity given the upfront premium that is paid. We recognized in this instance that the company itself hadn't done anything wrong. They had received the application, reviewed it, and given the information on the application, the sale seemed appropriate. So what we did in this instance was reach out to the company and say, hey, listen, This is an issue. We realize it's with the producer, not you. Please make it right for the consumers. They were willing to do that. They reversed the sale, got the monies back to the consumers, and then we took action against the producer, recognizing that really where this thing broke down was where the producer did not accurately identify the net worth and income of the applicants and sort of misled the carrier, the company providing the annuity in that instance. As with some of the other products I've talked about today, really be careful when you're purchasing it. Particularly with annuity, it makes sense to make sure the product's right for you, given your age, your expected income, what you expect to spend in terms of travel or housing or entertainment, whatever it may be, your costs going forward. Something we would always suggest people consider is seeking advice from another financial or legal professional that's not involved in the sale of the annuity. So we've received a number of complaints here at the department in which individuals have purchased significant annuities without having ever spoken to anyone other than the producer selling it. And what really stinks for those people is it may be a sale that entirely complies with the law. It's suitable given the amount of money they have, both liquid assets and other retirement income. It may make sense in terms of their age. They're only in their 60s. They need to plan out for their 70s and 80s given life expectancy. So it may be an entirely legal sale, but suddenly they go, oh my God, I didn't realize it was going to be quite like this, or all my money's tied up. Can you help me? And the sale's completely legal. There's nothing that the department can do at that point if it's a lawful sale. But in almost every instance, those individuals who come with those complaints, they never sought advice before the sale from anyone else kind of in their sphere that they would otherwise seek financial or legal advice from. Certainly something to always consider with the purchase of these sorts of products. Mystery service contracts. And this one I may get some ire up here in the chat. I presume many of you have seen mailers like this. Their final warnings, they're cautioning you against what you may have to pay for, your home should your furnace go or HVAC. Ones like this that have a registration fee voucher for a vehicle warranty. It's a final notice. Ones like this is again another, I believe, a home warranty one. You'll see that schedule where they talk about what you might have to pay should you not purchase their product. These are all mailers that came into the state, were received as part of complaints over the last, let's say, 4 or 5 years or so, by individuals who see these. We call them mystery service contracts because at least in the discounting 25, in which things have changed, and I'll get to that in a moment, a lot of these would come into the state with very little branding. There's no way to know exactly who was behind these. We receive multiple complaints every month, both about these. We call them 415C mailers because that's a statute that controls RSA 415C. They're consumer guarantee contracts or service contracts for both these home and auto. And I'm sure many of you have also received the calls, right? We want to speak to you about your extended automobile coverage, your extended automobile warranty, same sorts of products. Big concerns here at the department about coverage and transparency. Coverage, both that the companies are standing behind their products and the contracts that they've executed with consumers here in the state. But like I said, transparency. You'd get inundated with these and have no real sense of who was sending them in. Huge difficulties here at the department when we were trying to take appropriate action, recognizing that some of these did violate New Hampshire law in terms of high pressure sales tactics or otherwise being misrepresenting what the product is or the situation the consumer was in. We did last legislative cycle sponsor a bill which came into effect this year, changing a number of things in this space. One of them is that all mailers coming to the state must have identifiers on them, identifying who's sending the mailer and the obligor. That's the term of art for more or less the insurance carrier, the one who's backing these products. So now I can say, if you get one of these and it doesn't have any identifying information, throw it in the trash. It's not a lawful advertisement here in the state. There was also some other changes made to avoid improper marketing techniques, things like those high pressure sales tactics, or otherwise, falsifying misrepresentations like that one. I'll go back really quick, doesn't take too long. Things like this, the registration fee voucher, it looks like a check. That's not permitted any longer. And one of the other things we changed as well was making sure that these companies weren't targeting specifically seniors. Some of our research indicated that some of these companies were doing that, targeting seniors, inundating them with mailers and calls to try to get them to purchase these products, and unfortunately it seemed preying upon some of the vulnerable here in New Hampshire. In the last few years, we've taken action against more than 17 of these kinds of entities. Penalties have included fines, restitution, suspension of their registrations. They're not provided a license but a registration, but it operates very similarly, as well as cease and desist orders. The nice thing about RSA 415C is it does allow direct restitution to consumers. So that's one in which we have been able to get direct restitution through not only consent orders, but also the administrative process. And it has resulted in, thankfully, significantly less complaints. Now, I say that, knock on wood, I guess we've received less complaints. Maybe people just aren't sending them in to us. If you still get these and you got concerns, please send them in. But it certainly appears from my vantage point that we're having some impact here on the market and shaping it up and getting in a better spot here for both those that are doing this the right way here in the state, as well as the consumers here. Last, I'll talk quickly about Medicare Supplement, Medicare Advantage. That's been really hot lately in terms of many concerns coming into the department. We've gotten a lot of complaints about the availability of these products, both just if they're offered in some of the counties here in the state, with some providers pulling out, as well as concerns about affordability. Unfortunately, many of these issues, not most of them, are outside the control of the New Hampshire Insurance Department. A lot of issues with decreased profitability of the plans, and so you've got carriers looking to try to make the best choices they can for their business models going forward. And unfortunately, we do have some limited jurisdiction over Medicare Advantage, given that CMS has primary jurisdiction over the Medicare Advantage plans. That said, we've released 2 bulletins on this issue lately. I have them both up here for you. You can find them on our website. The first related to compensation for producers providing incidental services, making it clear to producers who are having difficulties in terms of making a living doing what they're doing, selling these products, that there are other avenues to seek compensation through consumers if they're providing incidental services beyond just the enrollment in a Medicare Advantage or Medicare Supplement plan. The second bulletin relates to carriers providing adequate compensation to producers that are selling them and not working to frustrate the sales of these products in the state. Both the bulletins can be found, like I said, on our website. So what I want to say here is, if you forget everything else that I've shared with you today, and I hope you don't, but if you do, remember this: Consumer Services. They are a fantastic group of people who work just down the hall from me. That's their number, their email address, and the URL for the website to them. They work tirelessly to help consumers, to help providers, to get information to those who just need some guidance. Now, they can't, of course, provide legal advice, but they're very helpful. Last fiscal year, they recovered $6.5 million for consumers here in New Hampshire. So an incredibly helpful group of people, and that was when they were understaffed. I think it was 5 people for most of that year. So more than $1 million per person they're recovering, and I'd expect even more this fiscal year as now they're fully staffed. On the other hand, enforcement can take action against regulated entities and individuals. Oftentimes our referrals do come from consumer, but they come from elsewhere, and so we help both consumers and the marketplace in that sense. And then as well, to kind of close things out there, fraud can investigate criminal activity, and when they find sufficient evidence, they refer it to the prosecuting authority, whether it be the U.S. Attorney's Office, the County Attorney's Office, or the local police prosecutor. How you can help. What we always recommend, report to us unfair insurance trade practices or other things you see that concern you to protect consumers and the market. It doesn't just need to be consumer harm, though. If you see something going on that doesn't seem right to you, and you're in this field, you're in insurance, reach out to us. It could be, I feel like I'm asking you to snitch on your competitors, but that's what I'm asking you to do. If you see something that's wrong, we wanted a fair and competitive marketplace for everyone. If there's someone operating in the same space as you in insurance and they're not doing things right, let us know. We'll make them do it right. And then it's a level playing field for everyone. Encourage those to report concerns they have. And it can be concerns that maybe it's something that's unlawful, maybe it's just something that's not getting resolved appropriately with an adjuster, with a public adjuster, with an insurance carrier. Have them reach out to us and have the individuals and consumer help those people to work through those problems. And then lastly, cooperate with our investigations. I expect many of the people on the line are either work with regulated entities or represent regulated entities. As you know, we have pretty significant power to request documents, but they're privileged, confidential, and not subject to those right-to-know requests pursuant to New Hampshire RSA 400A16. So just work with us. We're pretty cooperative. We're able to resolve many things either through a settlement, and sometimes that's not even required. As I mentioned earlier, more than 50% of our investigations don't result in any administrative action. It's just something we need to trust but verify, confirm there hasn't been violations or significant enough violations to warrant administrative action. So don't be difficult, just work with us, get us the information we need, and we can work through the issues together. Lastly, happy to take any questions.
Yeah, thank you. Josh, we do have one question. I'd like to remind our
Sure.
audience that we're happy to take questions into the chat. So by all means, please go ahead and type them in. We have one now from Brad Dyer. He asks, does the department have oversight of Medicare health plan marketing? And specifically, he mentions mail.
So we have jurisdiction over Medicare supplement plans. We have very little jurisdiction over Medicare Advantage. So if there's concerns about mailers going out in Medicare supplement, please get in touch with the consumer division. Even if you think it's more of a violation of law rather than anything else, consumer generally works as the clearinghouse to take in concerns or complaints and then route them to the appropriate division here in the department. So certainly any concerns about Medicare supplement, we have less jurisdiction over Medicare Advantage. That said, I don't want to discourage people from reaching out if they have concerns.
Thank you, Josh. I don't see any other questions, but we certainly invite them. In the interim, or without any more questions, I'm happy to ask Deputy Commissioner Nyan or Commissioner Betancourt if they have any final thoughts.
So I just have a couple of concluding thoughts. Thank you, Andrew. And Josh, phenomenal presentation. Really, really appreciate it. A lot of good information there. Before we wrap, I want to underscore the accomplishments of the Enforcement Division. I'm proud of Josh. He's getting better at taking a little bit of credit for the great things that that unit is doing. But the work that they do every day really has tangible outcomes that make a difference for the consumers in this state. In fiscal year 2025, the Enforcement Division conducted 321 investigations, initiated 36 administrative actions, and assessed almost $1 million in fines. And it's important to appreciate that those are not just numbers. They are a clear signal that we are, as a department, and that unit is responding to consumers, addressing their concerns, and holding producers, carriers, and other intermediaries to the standards that Granite Staters really deserve. And as Josh mentioned, when you combine those results with our consumer division recovering $6.5 million for consumers in recent reporting, you see that enforcement and consumer protection is not abstract. It is real relief to consumers. It is fairness in our marketplace, and it's having a real world impact for Granite Staters. And I want to say as well, the work and cohesion between our consumer unit, Josh's enforcement team, and our fraud unit is absolutely outstanding. So much of the work that they do is a team effort, involves a lot of coordination, and I really could not be more proud of those teams and the work that they do. And by the way, and I say this often when I'm out speaking to industry groups, if you are a producer who is joining us today or viewing this program at a later time, it is really important to remember that if you receive a call from Josh's team or our fraud unit, please make sure you return that phone call. The vast majority of times, they are simply investigating a situation in which you might have some information that might be useful to them. I think as both Josh and I have emphasized, the vast majority of people engaged in the insurance industry here in New Hampshire, they do a great job. They are playing by the rules. They're conducting themselves in an ethical manner. But our teams here are thorough in their investigations and when they're chasing down issues for consumers. So most of the time, you're not going to be the focus of their investigation, but they may need some information from you. And if you fail to call them back, if you're not responsive to their inquiries, then it is going to become a problem for you. So do the simple, easy thing. Just give them a call back. Find out what it is they need. You may or may not have something that's helpful to them, but just make sure that you're responsive to their inquiries. The other thing I'll mention is that, here at the department, we do support innovation. We understand that from a cost perspective, ACA plans may not be feasible for every individual and family. And the free market, seeking innovative opportunities and alternatives, are out there exploring what might be available, what might work best for those individuals, and they're trying to craft products that are responsive to those needs. We support that when it is done legally and legitimately. When you're doing it the right way, that is absolutely something that we support. And I know we've talked about a lot more products than just major medical, but regardless of the particular product, the key to all of this is transparency and honesty to the consumer, ensuring that the consumer fully understands what the coverage actually provides, what it's going to cover, not cover, what they're getting for their premium dollar. Being upfront and transparent about that with the consumer is so important, because it empowers the consumer at that point to determine whether or not that coverage is going to be appropriate for their needs. So again, being honest and transparent, that's one of the key takeaways from the presentation today. And by the way, speaking of the 415C or consumer guarantee contracts, Josh did a great job of covering those today. If you're someone engaged in that business and you've unfortunately made the choice to ignore New Hampshire's new consumer protection provisions, the new law that we put in place to deal with those products, if you're going to ignore that law, really do yourself a favor and do not send one of your advertising letters that contains between 15 to 20%, 15 to 20 violations of state law to the commissioner. I got one of those a few weeks ago. I called the number. Josh is handling them. Unfortunately, we had to ruin some people's day, but just follow the law. That makes it a lot simpler for everybody involved. But as professionals, as advisors, as people who are engaging with the public in our industry, you play a really critical role, and we want you to be engaged. And so if you see something that doesn't look right, if there's something that you've just got some questions about, come to us. We're happy to be a resource. We're happy to try to guide you in the right directions. Again, to producers, I always promote the great work that you do on behalf of consumers. And we here at the department fully understand how important the work that you do is. But please, do the right thing. Resist the temptation to cut corners or enter into ethically dubious arrangements. Not simply because you're going to find yourself in trouble eventually and get a less than pleasant call from Josh, but also because it has a real world harmful impact on the public. And obviously that's something that none of us really wants to see. So again, as Josh mentioned, the enforcement division can answer questions, can help you get clarity if something's not looking quite right, or if there are red flags or questions in your mind. Working with them, you guys are often the first ones to spot the warning signs of abuse and confusion or misleading practices. So please do engage with them and work with them. Beyond that, I want to thank you all for your time and your commitment to protecting consumers. We ask that you stay vigilant, engage with the department, and continue to work together with us.